back to Ride On Academia. We are still on our series on the final account of a sole trader, and we are on the statement of comprehensive income, right? In our previous video, we have seen how to prepare the trading account, which is the first part of the statement of comprehensive income. In this particular video, we are going to be looking at the profit and loss account, or it's also called the profit or loss account. Okay, that's the second session of the statement of comprehensive income. All right, now on the board you can see I've already shown the format, all right, of the profit and loss account. What we try to see in this account is how we can get the aggregate of all other expenses that occurred in the business. We refer to them in accounting as the indirect expenses. Okay, the indirect expenses that occurred in the business during a given year. Okay, we try to take them into consideration. Indirect expenses because they were not really expenses that are related or that occurred directly on trade. Okay, the trading account records the direct expenses on trade in regards to trade. So the profit and loss account will look at the indirect expenses that although did not happen because of trade anyway, but they still happened in the business. Okay, and then we have been able to classify. If you look at the board, we have been able to classify our expenses. Okay, in the profit and loss section, expenses can be classified, although it's not like it's really necessary anyway, but for the sake of emphasis and understanding, all right, expenses can be classified. We have the administrative expenses. The administrative expenses involve the expenses that is carried out by managers or in the management section. All right, they are not really involved in trading, but they are involved in formulating the policies that regards the trading. Okay, they are involved in making rules. So even the administrative building or administrative department of an organization also carry out certain expenses. So in the profit and loss account, we consider every expenses that occurred in the administrative okay, or administrative department. All right, now we can see the office salary, like the salaries of, let me say, the accountant of the business, the chief executive officer, maybe the bursar, the registrars. If we come to trade, we also have other executive people. All right, the business manager, like I just said, all their expenses fall under. And if there was any rent of the office, all right, of the business, maybe the rent was paid separately, or in many questions it's actually stated the portion of rent or administrative building. Okay, so expenses are classified. The stationery used by the administrative workers, the pen that was used by them, the office equipment in the administrative building, right? What we consider here is the depreciation of the equipment, not the office equipment value. Okay, the office equipment value is considered in our statement of financial position, which we'll be looking at shortly. Okay, what we consider here is the depreciation of the office equipment, the equipment used in the office. All right, when their value reduces, we consider them in the administrative arm, right? Then we look at the electricity bills that was paid by on the administrative department, okay, for their lighting and heating and whatever. So we look at the administrative expenses. We also look at distribution expenses that are involved in moving goods from the business to the final consumers or to other customers, maybe retailers or wholesalers. Every expense is involved, all right, mainly retailers and consumers, right? Every expense involved in moving these goods from the business to the retailers or the wholesaler comes under the distribution expenses. All right, as you can see, we have the carriage outward. Okay, we have the discount allowed. Discount allowed is a reduction. We have looked at this in our cash book, right, in our 3-column cash book. Discount allowed is a reduction in price when customers pay on time. Okay, it's done to encourage quick or prompt payment. Okay, discount allowed is an expense to the business. All right, so we have discount allowed as a distribution expense. All right, we have carriage outward. We have our bad debt. Now this bad debt refers to debts that are termed irrecoverable. That is, no matter what the business do, this debt cannot be recovered. All right, so they are called bad debt. It means people bought goods and for some reasons that money that they owe the business cannot be collected. All right, maybe the customer that bought the goods died, or the business liquidated, that the business closed up, alright, that can result to bad debt. So bad debt is also an expenses in the distribution arm, alright. Now we have advertising, the expenses involving trying to make the goods of the business to be known, alright, to get to the final information, to get to the final consumers about these goods, about their uses, alright. They are also expenses. Now we have increase in provision for bad debt. Now businesses as a whole try to make allowances. Now we'll be looking at this basically in another video, right, in our subsequent video on provisions, all right. So businesses try to make allowances for anything that can happen, especially in the business world, right. We try to make allowance. So when we make those allowance in the case of trying to provide for bad debt occurring, right, we call it a provision for bad debt. That is, that bad debt has not actually occurred, but the business set a certain amount from their debtors as a provision in case the bad debt occurred, right. So that increase in provision is treated as an expense, whereas the actual bad debt is already irrecoverable, right. Now we're going to be looking at the depreciation of delivery van. All right, the van used in conveying goods from the business to where the customers are situated. The van or maybe other equipment that may be used, all right, in carrying goods to the final consumer or the customers, when they are depreciating, it's an expense in the distribution arm of the business, right. So we consider that, and then we see also the salaries of the distribution workers, those who are involved in moving goods from the business to the customers. Their salaries are also considered as what? Distribution expenses. And the last expenses we want to be looking at in this video is the financial charges, okay, financial expenses. Now we have the interest on loan. When the business takes loan from the bank, all right, the loan comes as a particular interest rate, right. That interest on loan is a financial expenses or a financial charge on the business, right. We have bank charges for keeping your money in the bank, all right, and then we have the interest on bank overdraft, right. Interest on bank overdraft. Now overdraft and loan. Overdraft is short term, right. It's a short term amount borrowed by current account holders, right. And then when we say loan is long term, all right. Now we also look at when we have gotten the different categories, right. We total all their expenses from the administrative, we total the distribution expenses, we total the financial charges, right. When we total them, then we have our total expenses for the year, all right. Then we less our total expenses from our total income. Now let's look at our total income. We are having our gross profits, right. Now when you prepare your trading account, where we arrive at, all right, is our gross profit, right. So we have our gross profit from our trading account. Now there are other incomes that may not relate to trade, but this income came to the business during that particular year, right. So we also look at the indirect income as well as the indirect expenses under the profit and loss account, okay. Now other incomes that may not be relating to trade, because trade relates to like a direct income for the business is basically on sales. For a trading business, it's basically on sales. That's the direct source of income. But business may also be carrying out other activities that may be fetching them income, right, but it's not relating to trade. So these are indirect income, okay. Now we have the discount received. Now discount received has to do with a reduction that was given to the business because they paid on time, right, not really because they were trading, okay, not because they were selling anything, but because they did something else other than trade. They were able to pay a particular bill on time. So we have discount received, we have commission received. Now commission is paid mainly on maybe you help another business to sell their goods, right. When you help other businesses to sell their goods, that business gives you a commission, all right. So that commission received is also another source of income to the business other than sales, right, other than sales. Now we have the interest received. Interest received maybe from bank, right. Bank gives interest to their customers who keep money in their account, right. So bank give interest. That interest received is also another source of income to the business. Then we have rent received. In the case where the business maybe has a very big plaza, or they are using a very big building, right? They can decide to let out some portions of the business, all right, to other people to use for their own selling activities. When they receive rent from those people, that rent received is another source of income to the business, all right. And then we'll be looking at the decrease in provision for bad debt. Now, when we set provision for bad debt and it happened that the next year, all right, there was a reduction in that provision, it becomes an income to the business. Okay, we'll be looking at that in our subsequent video, all right. So when we total all our indirect income and add it to our gross profit, then we have our total income, all right. So the total income for the year will be less than our total expenses to give us our what? Net profit. So the aim or the goal of the profit and loss account is that we arrive at our what? Net profit. This is the actual profit that was made by the business during that particular year. So we're going to be going on a short break now, and then we'll be taking an example when we come back, all right, on the profit and loss account for better understanding. Stay with us. All right, welcome back. Now, before us is a question, right? And we're going to be using this question that is before us. We're preparing the profit or loss account, all right, with this illustration. This is our trial balance, right? We're going to be using this to prepare our profit or loss account. Now, in our previous video, we were able to look at the trading account, and then we have solved to ascertain our gross profit, right? So in this video, we are going to be continuing, all right, from where we stop, and then we'll be ascertaining our net profit. Meanwhile, while we solve, if you have any confusion, all right, or any question, please leave that in the comment section, all right. Let us get to know what you are thinking or how you are seeing it, all right. Stay tuned with us as we solve. All right, so we have an already solved question, right, showing the profit or loss account, right? Now our heading is the name of the business, right? In this case, Jacob and Sons. And then we have the profit or loss account for the year ending. That's how it is usually addressed, right? The name of the business. And then we have our currency sign, very important. Include your currency signs when necessary. Now we have our gross profit. If you've watched our previous video, we had a gross profit of 15,894 naira, as you can see here. All right, so we're going to be adding our other incomes. In this case, we only had one other income, all right, which was the discount received. So we're going to be adding just the discount received, as you can see, directly to our gross profit to be giving us our total income for the year. All right, now we begin to consider our expenses. In this case, our expenses was not really categorized, okay, so we just have to solve it that way. Okay, it wasn't really categorized. So we have our carriage inward, our motor expenses, our salaries and wages, general expenses, the rent, the discount allowed, all right. And then when we sum that, we have a total of 10,930 naira, which will give us the total expenses for the year. Okay, now when we less now we are bringing in our bracket. Okay, when we are less, we bring in our bracket. When we less our total expenses from our total income, then we get our net profit for the year. All right, our net profit for the year. So with this, we've come to the end of the profit and loss account, right? We have come to the end of profit and loss account, this section. Okay, don't forget to like our videos, subscribe to our channels. If you want to watch more videos, click on your notification button so that when new videos drop, you'll be notified immediately. Comment on this video, give us a thought, give us a review. All right, share this video with as many as you can. We'll see you in our next class. Thank you.